WTI Crude. Let's do a good session on WTI Crude. Now, the price currently rests at $83.95 per barrel. And the point we're at is off the back of a retracement. So you had this extreme move. People were giving away their oil. They didn't want to pay to store it anymore. Oil was literally worthless. If you got long at that point, or you longed ETFs and you weren't stupid, or you weren't silly, you would have made an enormous amount of money. It was never going to stay at $0. That was never going to happen, right? It's just unsustainable to even consider that oil would be worthless. Okay, so that changed very rapidly. And again, it's a brilliant example. It's an absolutely amazing example of how you need to trade the market at the time, right? Because the fact that it became worthless was not in line with the future of the world, right? So you looked at it and you thought, that's a great price. I don't care really what they're saying about oil never being used again, or, it was COVID times, people weren't filling up their cars. It was just purely the price at the time that you needed to consider, right? So if you longed it, great. It comes way, way up because of war, okay, and demand. You get all the way up here, it's a very, very high extreme, not as high as it has gone before, okay, in a straight line almost. But nonetheless, it was always going to come down. It becomes unsustainable at that value. Suddenly, when the supply increases, you get the market pull down. So again, trading the market at the time. It's not about thinking about the future all the time. You're just looking for the value at the current day. If you sold it at this current day and that current value at the time, you would have got a good entry based on market value. Vice versa here. If you bought it at this time at great market value to the long side, okay, you would have got a great deal as well. So now you're about halfway and you need to consider where the market may go in the future. Now, there's a few things to consider with that. As you'll know, I called it long there. And I said, look, get out because it's a little bit tetchy. Now you've got the wars or potentially a larger conflict in the Middle East. The Middle East obviously is very popular for oil. And it is a little bit concerning that perhaps that could raise the value of oil significantly. So if you are trading this and you're going to be shorting higher up, I would do it lightly. If you're considering buying it, I would also do it lightly. Now, I know I said the price of oil could go up a lot if you get that rapid market sentiment change, but if you look now, that's not happening. And if you find that tensions ease very quickly, you're going to get caught on the wrong side of it. So never ever pretend that you know exactly what the market sentiment is going to do, because nobody, unless you are an economist, and you may be able to help yourself in an economic sense, but nobody actually knows politically or anything like that what is going to occur. So there's no point, therefore, in judging your risk based on what you think is going to happen on a completely fictional basis. Because what you think is going to happen in the Middle East and what I think and what everyone else thinks is going to vary. But if you look at the screen and you look at the price is the only thing that's real and consistent across everyone's opinion. There's no debating what is a low price. There is similarly no debating what is a high price. All you can do at any time is judge the validity of your entry based on where the market is now. So this sideways movement basically represents indecision. Traders don't know if it's going to go like this or like that. Okay, so there's no point in upping your risk because it's an indecisive market. But what you can do is say, all right, well, if it was going to get higher, I would probably expect to have seen more impetus to the upside. In other words, more buying power. Okay, you haven't had that at all. So that's not happened. If you're scalping it, you probably could have done so for the last 4 days. But because you're not seeing that buying power, I wouldn't be heavily shocked whatsoever if ultimately it does come lower nearer this 200 MA on your daily. That coincides with various minor price actions across the board, minor price action areas across the board here. You can see, if you look closely within the choppy market, that you had very good push up at that point and here, and there's various areas where you've got contention and candle wicks. So if you're going to get long, I would only do so lightly, and I would let the market use its weakness to fall. Okay? And I would much prefer it nearer this 200 MA. I don't particularly like it long right now, okay, just because you've got dangerous market sentiment. And if I was going to short it, it would have to come way, way, way higher up, back in line with key levels of price action to the upside, which I'm labeling now. So at this point, it's hands off. It's hands off because you've got that dangerous market sentiment. It's hands off because you're just sliding straight back down within weakness. Okay, you're not seeing that large buying power over here. And if you do trickle slightly lower, you're going to come into key levels of support anyway, around 77 to probably 79 or $80. So anything under this low, I would say you could take long, but I would only do it lightly. That comes more or less nearer 80 and under. Okay? If you slide like this, it's really not going to shock me. 78 is probably the best or the most valuable area, in my opinion, given that current market sentiment I was just referring to. So you're either going to go like this in short terms, you're going to go like this, and I would prefer it long there, or you're going to go like that, and I would prefer it short up there. At the moment, I'm not interested. The reason why is because your profit margins are so close and I'm not scalp trading it. If you're scalp trading it, you might get long here and short at the top of this very, very small channel that's persisted for several days. Okay, if you drop your time frames, you'll be able to see it like this. Okay, now, the reason why I say about scalping it is because if you've done this, if you'd longed it down here and you shorted it higher up, you would have been right a significant amount of times, and of course you would have collected a significant amount of gains doing that. That's why we hedge as well, because you can drop your size, collect the profits, and then obviously extinguish any trades that you happen to get wrong. But you can see once you've got down here, it's looking very, very weak. Okay? There's only so many times you can hit these areas until they break. Okay, you see it repeatedly in markets. You can only do that, and it's the same to the upside. But at this point, it's looking worse to the downside, even with market sentiment. People just don't really know where they want oil at the moment. So you can go with that, take it slow, let the market move, and have a much more safer outcome. So thanks for watching. I hope that helps. You can get my free training underneath. Don't forget to like, share, comment, and subscribe. I'm going to put these on YouTube as well. If you could press the like button now right underneath there, guys. I haven't refreshed it, so there's only two. If you can press it at the top right if you're on mobile. Don't forget, if you're serious about trading, you want things to change, or perhaps you're not making money trading, just go to this link. There's tons for free. It will really help you. Thanks.